Mr. Mohan, good afternoon, Mrs. Badari.
Yeah.
Yes.
So,
I wish you all good morning, good afternoon, and good morning for those who were on the other side of the ocean, because my microphone was still on mute. So I'm taking over the moderation of this panel on responding to banking regulation and supervisory challenge during the pandemic. As I said, the previous speaker have already alluded to some of the points that we'll cover during these sessions. As we all know that our policymakers, governments, central bank took a number of fiscal and monetary measures actually to mitigate the impact of the crisis or the pandemic crisis on our economy. And these measures have really been very effective in keeping our economy afloat. Having said that, we know the central banks have they have both to take action really to sustain our economy, but also to preserve and safeguard our financial system, essentially the banking sector. And some of the relief measures that were taken by the central bank were then later endorsed by the the Basel Committee for Banking Supervisions. And these measures were aiming really to reduce the effect of the crisis on the balance sheets on some of our financial institutions. There was a lot about regulatory forbearance, there was a lot about debt restructuring, and so on. What we intend to do in this session is actually to discuss most of these measures. We have invited a group of panelists, very experienced professionals in the sector. We have Mrs. Rana Badawi, who is the sub-governor of banking regulations within the Central Bank of Egypt. Rana has been working with the Central Bank for the past 13 years. Her full bio is on our website. We have invited Mrs. Lioness Firi Mambo, who is the Assistant Director of Banking Examination and Bank Surveillance in the Banking Supervision Department of Zambia. We hope that Mr. Okafor, who is also the Director within the Banking Supervision Department of the Central Bank of Nigeria, will manage to join. We have with us Mr. Amarendra Mohan, who is a former senior advisor with the Financial Stability Institute, hosted by the Bank of International Settlement, the BIS. Next slide, please. What we can say in terms of introduction is that this work that we're also doing on banking regulation supervision is well aligned with the work we are doing within the Secretariat, which is also to support the work of what we call the Community of African Banking Supervisors that we established within the Association of African Central Bank. And one of the mandates is to enhance the alignment with the international standard. And beyond that, we try to promote also activity that enhance the operational resilience of African banking banking system. I think we have heard about the big picture. We will now, as I said, try to zoom on the banking sector and essentially on banking regulation and supervision. We have Mr. Mohan, who has volunteered to share with us what you can call an introductory presentation that will set the scene for for the discussions. So you can now move to the slide of Mr. Mohan. Mr. Mohan, you have the floor now. You are on mute as well as I was before. Please try to unmute yourself. You are muted.
Is it okay now? Can you hear me?
Excellent.
Okay, good. So thank you for having me in this annual General Assembly. The last time I remember having been a part of this meeting was in Nigeria a few years back, where we had this annual General Assembly, and we were doing a seminar on bank resolution crisis management together. So it's a great pleasure to be back. Today, I'll be talking about responding to the banking regulation and supervision challenges during the global pandemic. And my focus would primarily be international or global. So can we move to the next slide, please? Yeah. So, well, COVID-19, what does it mean for bank supervision and risk management? Firstly, what I think is that COVID-19 is not one crisis, but actually it is several crises rolled into one. First of all, it is a crisis of lives and health and lives, and because of the efforts to contain this crisis, there have been lockdowns, and which has had impact on the real sector, and thereby as a second order effect on the financial sector. There is probably no country which remains unaffected. Rich, poor, middle income, all countries are impacted to various degrees by this crisis. And another very and there's a lot of uncertainty relating to how the economic growth will come back. And although the vaccine provides some degree of hope on that front, still many questions remain. So at a global level, at a national level, at a macro level, the economic growth, and at the level of the bank and the bank supervisor, how this will impact the businesses that are being financed by the bank, and how the bank supervisor will supervise the banks during this period of uncertainty. It is not a cyclical kind of an event. It's a structural one where we will see some very fundamental changes to the way people live, the way people buy things, the way they entertain, or the way even the manufacturing will take place in future. Just to give you one example, Bill Gates said that maybe 50% of the business class travel may no longer exist going forward. What does this mean? This means problem for the airline industries. This means not only the airline industries, but problems for the others who are in the aviation business. So for example, the airports, the duty-free shops, the taxis which take you there, the hotels, and so on. This means the loss of jobs, because the airlines industry will be impacted, and so will the other many industries associated with flying. Economic scarring, in the sense that there may be lost output, lost jobs, which we may not get back again. So a BIS study says that the US, because it has a lot of consumer-facing industries, could become a 98% economy. So 2% of its potential output could never get recovered. So essentially, this could be something like a permanent loss. From a financial stability risk point of view, there are risks building up within the financial systems, and the authorities need to look at these very closely. The government supervisors and other agencies have taken measures to counteract the negative impact of COVID through fiscal, monetary policy measures, through regulatory, supervisory measures, accounting, the flexibility in accounting norms has been used. And for the banks, well, this is a question of, the elevated degrees of risk that they face and the strategy going forward. Because for them too, the business isn't going to remain the same as they go forward. Can we move to the next slide, please? Next slide. Yeah. So from the at the international level, well, as you know, the Financial Stability Board coordinates the work of all these standard-setting bodies: FSB, Financial Stability Board, the Basel Committee, the insurance, deposit insurance, security settlements, etc. So at the level of Basel, the policy makers, they are engaged in timely monitoring of the financial stability risks and sharing information on that. The Basel Committee has recognized and used the flexibility of existing financial standards to come up with certain measures. Temporarily, the operational burdens on firms and authorities have been reduced by deferring or postponing or the implementation date of Basel III reforms and other reforms. So one of the very important aspects is that while we are providing relief, it should be the consistency with the international standards need to be maintained. And the crisis does not mean that there should be a rollback of reforms. So no rollback of reforms. We have come this far, and the banking system needs to continue with building up resilience. Coordination is very important, and coordination and communication with regard to the future timely unwinding of the temporary measures. So please remember, these are temporary and not something which will remain for extended periods of time. Last month, the governors and the heads of supervision met at Basel, and they reaffirmed some of these objectives or measures. So they reaffirmed that ongoing monitoring and assessment of the financial stability risks will continue. They will continue to use flexibility in standards. Implementation of standard, their monitoring is important. And if necessary, the global measures will be adopted in a coordinated fashion. Next slide, please. Yeah. So the member of the FSB member countries, they have taken some of these actions: lending and credit support by way of loan guarantees, restructuring, release of buffers, putting restrictions on distributions. There has been funding and liquidity support for market functioning. There is a focus on the operational and business continuity of firms, and also the business continuity of central banks and supervisory authorities. Next, please. Yeah. So one of the key things that has happened during the crisis is giving relief to borrowers. When I look at this, I am also very mindful of the delicate balancing act that needs to be performed. On the other hand, on the one hand, there is a need to support the economy in the short run, because we are going through an unprecedented crisis, one in a maybe 100-year event or something like that. So the firms which are viable need to be financed. Maybe the loans need to be structured. Maybe the accounting standards need to be, the flexibility needs to be used. Again, because these are exceptional times. But there is also the other part, which is to maintain the financial system soundness in the medium and the long term, to ensure that the bank's reported financial statements are transparent and reflect the true position of the, let's say, credit portfolio or the asset quality of the banks. The supervisory authorities also need to be transparent in the measures they take, and also in the way, in the manner in which they deal with the banks. All this is very necessary to build the market trust. And this is very important, because if that trust is lost, that could lead to a very dangerous kind of a situation. So in this uncertain environment, the banks need to decide, come up with an answer as to which firms will survive, What are the businesses and jobs that will remain going forward? Because some of the businesses may just be lost because of the crisis and the changes that it will bring about. So solvent firms need to be supported. Solvent but illiquid also need to be supported. And those which are insolvent, well, we need to be cautious about them. Because we don't want to support we don't want to support banks on oxygen, and when that oxygen is taken away, the patient doesn't survive or that firm doesn't survive. So the firm should be in a position to survive without the oxygen when the oxygen is taken away at the appropriate time. Next slide, please. So Basel III, as you know, built up the financial resilience in banks through mandating enhanced risk management requirements, higher and better quality capital and liquidity, building up of buffers in the banking system, and for the systemically important banks coming up with recovery plans. So all this, framework, if implemented properly, led to a higher resilience among the financial firms. Today, the Basel Committee is also is also mentioning that operational resilience is equally important. Why? Because when a pandemic like COVID comes, then the banks and also the central banks and the supervisory authorities should be able to perform. What is operational resilience? Well, the maintenance of the critical operations and the critical functions which the banks or the financial institutions perform. So these would be those activities which are critical to the economy, which if not performed could impact the financial system, maybe the financial stability, and so their continuance is very important. So think of the clearinghouse, for example. All the activities, processes, services, and their relevant supporting assets associated with critical functions are important. And so the operational resilience has to be looked at from that point of view, and also in the context of the overall risk appetite and risk tolerance, the risk management philosophy of the bank. So operational resilience, again, as I said, there's a lot of focus on it now. The Basel Committee came out with its paper in August this year on operational resilience. Next, please. So I have highlighted, some of the key, let's say, points, and now there are certain issues which we need to consider going forward. Firstly, like when we unwind, when to unwind and how to unwind it. There is a need for coordination, collaboration, and communication. All that has been taking place in, let's say, the previous crises, but a pandemic is different in terms of the impact that it has, the scope, the number of, let's say, countries affected, the extended duration of time till which we are feeling the impact of the pandemic of COVID. So there needs to be coordination, collaboration, communication at the local or national level, at the regional level, and at the global level. Prioritization of supervisory activities is important, so offsite, onsite, and monitoring of risks on an ongoing basis. So what is the level of NPLs, non-performing loans or non-performing exposures? How is the profitability getting impacted on an individual bank as well as the banking system? Solvency or capital adequacy ratios, governance. What about the problem banks? During the pandemic, during this crisis, there should be no automatic triggers imposed on the banks. So there is probably need for a dialogue and for having a plan which will enable banks, if they are solvent, to come out of the problems. Consumer protection, well, most of the regulators and supervisors probably don't deal with it, but there's a separate body. But consumer protection is equally important. Going forward, well, digital transformation. So how the digital transformation will impact banks as also the supervisory authorities, because this crisis has shown that even when there is a lockdown, the supervisory authorities and the banks need to function. And also climate-related risks. What is the role of supervisors? There's been a lot of work in this area at the international level, in the European Union, the UK, and other countries. And this is one of the risks which the Basel Committee will also be examining going forward. I think I have all that to say by way of the introductory remarks. And of course, I'll be happy to interact during the panel discussion. Thank you.
Oh, okay. Thank you very much, Mr. Mohan, for this very enlightening presentation, which actually set the scene for our panel discussions. We can take away 2 points from my point of view. First of all, that there is a growing concern as whether the measure that have been taken so far have actually been successful in reducing the risk to which the bank are exposed as a result of the crisis. And also there is a point that we might be in a situation as the crisis continue to unfold, where the non-performing loans are continuing to grow, and in the future really pose a threat to our financial system. Okay, on that, I think we will now move to our panel discussions. I will invite our panelists, the other ones, to activate their camera and their microphones. I will start as first questions, directly to Mrs. Rana Badawi. Mrs. Badawi, you have listened to what has been said in introductions by Mr. Mohan. Could you very quickly, in 2 minutes, tell us a bit, what are the measures that have been taken by the Prudential Authority, the Central Bank of Egypt, in your case, to ease the impact of the pandemic on the banking sector, and how effective these measures have been actually in sustaining the flow of credit to the real economy? You have the floor, Mrs. Badawi.
Okay, thank you very much, Mr. Kamewi, and I would like first to thank Making Finance Work for Africa for extending the invitation to me to participate today in such an important event during such a critical time to share the experiences with our colleagues in the central banks of Africa. Well, I will just start with a very brief introduction about the country. You know, Egypt is a big country with a very high level of population that exceeds 100 million people. Economic reforms have been on top of the agenda of the government since like 5-6 years ago. Collaborative efforts have always been done since 2016, whereby the central bank participated in this economic reform efforts. This started by first the flotation of the Egyptian pound back in 2016. This resulted in increasing inflation and also increased rates of interest rate. We worked on all this to stabilize the economy, which actually led to the fact that we started the pandemic with a strong, resilient economy and also strong, resilient banking sector. I will just give very briefly some macro figures. The real GDP growth rate is currently at 3.6% compared to 5.6% in 2018-2019. Noting that Egypt is among the countries that have been announced to still have a positive rate of growth for GDP even after the pandemic. The annual inflation rate reached 4.5% as of figures of October 2020, compared to 5.1% in March 2020, noting that this inflation rate has been 30% in 2016. I gave this a brief introduction just to explain that the outcome of the economic reforms was the real cause of the persistence of the country to achieve, and the persistence of the country to achieve them led to a strong economy and resilient banking sector, as I mentioned. Talking about the measures taken by the Central Bank of Egypt specifically to face the pandemic, well, we started in March 2020 by directly cutting the interest rate by 300 basis points. This was then followed during the year by another cut of 0.5%, followed by another cut of 0.5%. So a total cut of 400 basis points of interest rates was done. This was done to stimulate the growth of the economy and to encourage the lending to the industries and the sectors. Also, we immediately we issued we allocated 200 billion Egyptian pounds from the bank to support some sectors like the tourism, agriculture, the construction sectors, and also the mortgage sector, the mortgage finance sector. This allocation was through the banks, whereby they extended credits with no interest rates. We also enhanced the role of the credit guarantee company in most of the countries is to guarantee loans of small and medium-sized enterprises during the crisis, and as we depicted in also some of the European countries and some of the best practices, they expanded the mandate of the credit guarantee company to also encompass the Central Bank of Egypt issued guarantees for the credit guarantee company in Egypt to 2 billion for it to guarantee back-to-back loans of SMEs and 7 billion for large corporates.
It looked like Mr. Rana is no longer connected. We lost her. Okay, maybe around before she comes back. Maybe we'll move to Mrs. Mambo very quickly on the same. If she can just give maybe the highlight, because I think some of these points were covered. Mrs. Badawi, I think we'll get back to you afterwards on another point if you want really to develop a bit more. So, Mr. Mambo, you have the floor on the same questions.
Thank you, and thank you for. Sorry, I seem to get feedback.
I think.
I'm sorry. Sorry, I was facing some internet.
I'm sorry. Do you hear me?
We can hear you now.
You can hear me.
Yes.
Now. I'm sorry.
In between it, just to move it very quickly, because time is not our side, we hand over the floor to Mrs. Mambo on the same. I think when we get back to you, you can elaborate a bit. So, Mrs. Mambo, you have the floor now.
Thank you, and I was saying thank you for inviting me to this very important meeting, and at such a critical time that the entire world is going through. I'll give brief highlights in terms of the measures that the central bank took in Zambia to respond to the COVID-19. Like you heard in the previous session, Zambia is one of those countries that had challenges even before the pandemic broke. So with the oncoming of COVID-19, the situation just got worse. So in terms of the measures that the central bank put in place, the Bank of Zambia introduced a targeted medium-term refinancing facility with an initial amount of about 10 billion kwacha, which is about 500 million US dollars. This is intended to offer liquidity support to the financial service providers for onward lending to the sectors of the economy that have been impacted by COVID-19. There are conditions and terms that the FSPs have to meet to access these funds. And the credit risk arising from the onward lending is borne by the FSPs themselves. So in terms of credit risk management, assessment, it still lies with the financial institutions. And they've been quite thorough in assessing their clients in terms of who qualifies to access the funds. In addition, the main purpose was to ensure that in terms of recovery post-COVID, this recovery is led by the private sector. So to ensure that this is achieved, we did identify some priority sectors which we are looking to seeing that recovery come through. That is manufacturing, energy, agriculture, and tourism. And the funds that will be accessed under these sectors, they'll be for 5 years. And the entire portfolio of the funds, about 60% is allocated to those sectors. And then the rest of the sectors, including households and SMEs, will access the remaining part as long as they don't fall under the priority sectors. We also looked at our regulations in terms of loans and classification rules. We did issue revised rules. The revised rules are better able to accommodate the FSPs in terms of refinancing and restructuring of facilities. Our old regulations requires that, actually even the current one, we've given a waiver on that. It requires that when there's a modification to a facility, there's a restructuring, that facility has to be put on observation for a period of about 6 months before you classify it as performing. So the FSPs were required to classify the facilities as non-performing. So what we've done during the crisis is to waive that. And as long as the facility, the FSP is able to demonstrate that this facility indeed has become non-performing as a result of COVID-19, they are able to restructure without going through the classification route. Another measure that we put in place, when IFRS 9, the International Financial Reporting Standard 9, was introduced, we did give some transition measures to the financial service providers. They were supposed to account for day one impact over the next 3 years with regard to the regulatory capital. So they have to add back the adjustment of day one impact. But what we've done with the coming of the pandemic, we've also considered the impairments that are arising out of IFRS 9 as a result of the pandemic to be added back. And this process we've given the FSPs up to December 2022 in terms of the period in which they can add back the impairments that are coming through. This was also just to preserve the capital levels of the institutions and not to suffer an immediate shock as a result of the pandemic. We've also introduced other measures in terms of supporting liquidity to the commercial banks through our open market operations. We also introduced other measures under the payment systems. This was really to encourage the use of electronic payments as opposed to cash, as cash was seen as one of the transmission channels of the COVID-19. So the Bank of Zambia reduced the interbank payment settlement fees. The transaction and wallet limits were increased. They were adjusted upward for individuals, SMEs, and other enterprises. We also were actually very engaged with the market, and most of the mobile money operators did come to the table very early on at the onset of the pandemic in March to make proposals as to how they can assist to make sure most people are brought onto the electronic payments. So there was a waiver in terms of the person-to-person e-money transaction transfers of up to 150 kwacha. These are done with no fees. Initially, it was for a period of 3 months. And then after that 3 months, that measure was reviewed, and it's now been extended until further notice. So there are no fees being paid on that. The Bank of Zambia also implemented its business continuity protocols, and also the financial sector as a whole. They all triggered their business continuity protocols to ensure that the payment systems and the financial market infrastructures remained available during the lockdown. Because what happened is, in March, when the first case was noted in Zambia of COVID-19, we did go into a lockdown where about 70% of the people had to work from home, and only those that were identified to be working for providing critical services were allowed to work. Until about September, that's when we started opening up. So with that, a lot of people had to work from home, and the business continuity plans had to be triggered. I'll end there unless there are questions. Thank you.
Okay. Hello, can you hear me? Yes, fine. No, thank you very much for this exhaustive presentation of the support measure that were taken at the level of Bank of Zambia. I will now move to Mr. Okafor. I think, and I hope very much that the technology will really be on our side now. I will not expect that you go through the same details. I assume that more or less in Nigeria, you took very similar measure, unless there are very specific one that you think you want to highlight. But I think in addition to that, if you can just say a few words on how in the country you are trying to promote an active management of a non-performing loan in country, because they are certainly building up as the crisis is also lasting a bit longer. And also tell us whether you have developed or revisited your early warning systems in the country to identify or manage deteriorating bank condition in this specific context. So you have the floor, Mr. Okafor. Maybe 2 or 3 minutes will be fine, so that we stay in time.
Thank you, Mr. Kemawe. I'm much honored to be invited as a panelist. Essentially in Nigeria, the measures we took are measures to ensure continued flow of credit to the economy. So first of all, the monetary policy was reduced by 100 basis points. And then to ensure that banks continue to maintain credit to the real economy, we strengthened our loan to deposit ratio. We had issued a regulation that stipulates the loan to deposit ratio minimum, a threshold that must be maintained. We increased it to 65%. And the deposits in definition of deposit here is not just the deposit, in fact, it's funding. loan to funding is entire funding available. So just to ensure that the real sector is supported. Then we also, of course, we also introduce regulations to make sure that apart from just issuing loans, that much of the loans are in terms of long-term funding to preferred sectors, to agri sector, to forestry, to fisheries, and such sectors. And in order to encourage the banks to do that, for this long-term funding to the rail sector, we reduce the risk-weighted, the risk weight to such funds to 50%. It used to be 100%, we reduce it to 50% to encourage funding to the rail sector. Also, we also, okay, now in order to manage, because increasing funding to the rail sector, increasing credits to the economy in the midst of the pandemic will naturally lead to higher non-performing loans. So in order to monitor that, we introduced some measures. Number one, we issued what we call global standing instruction. That means that if an obligor is going to take a facility from a bank, that obligor has to tell the bank all the other banks where he has deposits. And that obligor has to agree on day one. He has to sign on day one that if he defaults on that facility, that the bank can have recourse to any deposit in any other bank in the industry. So that global standing instruction has been implemented, and we, over the period, we noticed that non-performing loans have been dropping. Actually, the implementation of the global standing instruction has led to drop in non-performing loans. Of course, we introduced forbearances for industries that are badly hit by the pandemic. So banks are allowed to, in recognizing impairments on facilities to such sectors, we have some forbearances that we have introduced. So, like I said, that global standing instruction has ensured that non-performing loans is reduced. We, on a selective basis, actually, yeah, we carry out our early warning system. The macroprudential unit normally carries out our early warning system, and we notice that the impact of the pandemic is not even across the industry. So on a selective basis, from the third quarter account, we have noticed that banks have really fared very well. They have managed to cope very well. So we were thinking of having a restricting dividend payment. They will notice that many of them have fared very well. So the restriction is going to be on a bank-specific basis. We'll look at their performance and we'll decide whether they can pay dividend. Of course, during the pandemic, we observed an increase in cyber risks, incidents of cyber risks, and we strengthened our cyber security framework and give additional guidance to the banks to be able to cope with the cyber risks. So presently now, we have conducted our risk-based supervision and industry tests after the third quarter of the year. We'll concentrate on the high-risk banks, the banks who classified as high and above average risk, and the examiners are finalizing their reports right now. So maybe very shortly we will be able to tell how it has really impacted. But if you look at other indices like performance in the capital market, performance of the capital market and all of that, inflation. Some of them have been stabilized. Capital markets, in fact, has been bullish. There has been a bullish run. The capital market has been growing, and the sector, the financial sector, has fared really has managed the pandemic very well. Banking sector, specifically the NPL ratio is on a downward trend because of the measures we introduced. So thank you. But if there are other issues, I will come in to make comments.
No, thank you very much, Mr. Okafor. I mean, this picture of the three financial systems really, I mean, this picture is really reassuring. We can comfortably say that our banking sectors and financial systems are navigating the crisis without very much, will not say challenges, but basically they are been able to cope with the difficulty and the challenges raised by the pandemic. With that, Mr. Mohan, what's your take? What will you say when you have listened to these three presentations or three presentation, if I can say, and what will you to somehow say, how do you see this crisis? How is it different from previous crises that the financial systems, whether at global level or regional level, financial systems have gone through? Please unmute yourself.
Yeah. So let me, start with the global financial crisis. So as all of us know, the global financial crisis started with banks, right? So the problem was with the banks. Now, thankfully, due to the Basel III implementation, banks are being looked at as part of the solution. So there's a big difference. I mean, in many jurisdictions where the Basel III reforms have been implemented, the banks have a sizable chunk of capital above the minimum levels. They have capital buffers, they have liquidity buffers, and they have the capacity to lend, which was not the case when the global financial crisis struck around 10 years or so back. So that is one. But the other part is that this is a very unique crisis in the sense that the problem is coming not from the financial sector, not really from the real sector, but from the health sector. So because the risk of infections and also unfortunate death, so that because of that risk, the economic activity is coming to a stop. The BIS called it the sudden stop, and the IMF called it the great lockdown. So everything came to a standstill, right? And because it came to a standstill, there was no economic activity, then that has implications for the borrowers. The borrowers were not at fault. I mean, if today, let's say the restaurants are closed, what can the person who is running that business do? And that restaurant is closed because of the health, reasons, because to minimize the spread of infections. And so that is why we have to look at, these borrowers very sympathetically, which of course, has been done in all the countries that we heard from. But at the same time, I mean, what I would like to emphasize is that, going forward, I mentioned that it is going to be a structural break. So we need to be mindful of the fact that, some of these industries may not survive. And one example I gave was, the airline industry, where if, let's say, 50% of the business class passengers don't travel, that will have huge implications because they are the ones who pay higher fares and, contribute a lot to the profitability of the airline companies. And together with that, the entire associated ecosystem gets impacted. So there are challenges. The good thing though now is that the vaccine is there and a lady has been vaccinated in the UK, as you may have seen on the TV. So that to me is a very positive development. Hopefully now we can talk of, you know, this crisis getting back to some degree of, you know, normalcy. Now that normalcy may be different from the normalcy that we have known so far. But yes, there is hope, there is light at the end of the tunnel. And so going forward, one of the key things that we need to also think about is, you know, we have had these measures, right? How do we unwind it? What is the way to unwind it in a fashion that it is non-disruptive, right? There are no cliff effects. So that to me is, you know, very important. And of course, from a prudential perspective, it is important to keep monitoring the health of the financial system, of the individual banks, take remedial measures wherever necessary, have a dialogue with the banks, maybe change the reporting systems. And going forward, you know, the supervisors too will need to have a bigger IT budget, because they need to change the manner in which the data, you know, comes to them. So rather than, you know, push, they need to be able to pull the data from the banks. And already there's work going on in, you know, several jurisdictions on that front, which I'm sure will get accelerated now. For that to take place, there need to be common data definitions, and, you know, the whole IT infrastructure will have to evolve in many ways. So I think these are, you know, some of the issues and the challenges which we need to be mindful of. Another thing which I want to mention is, you know, that well, I mean, this doesn't really relate to, you know, the supervisors, but what this pandemic has also done is it has brought in a lot of inequality. So people are talking of K type of growth. So if you look at K, there is one V at the top and an inverted V at the bottom. So there are some companies, you know, companies like Apple. Look at the market capitalization that they have gained. Look at the wealth of people holding those shares. And on the other hand, we have, you know, daily wage workers, poor people who have really struggled. And you know, like there are so many, you know, kind of stories of the problems that they have gone through. They have lost their jobs and so on and so forth. A lot of misery. So going forward at a, you know, broader policy level, I think we need to also be mindful of the inequality in our societies, and in terms of the economic policies, we need to ensure as to how we can build more equitable societies.
Okay. No, thank you very much, Mr. Mohan. It's really interesting, and this positive note, that optimistic note that you really mentioned with maybe the vaccine, we see, and we hope very much that we will, not very short term, exit this crisis. To be also a bit, to be fair, I think we have to go back to Mrs. Rana Badawi. Maybe she can. We heard from her that, and interestingly, that Egypt economy is performing very well. They have been shown a lot of resilience. Apparently, I mean, there's economic growth there, which is very was unexpected. I mean, when we entered this crisis, I had 3%. Can you tell us about how they are managing NPLs in the country, active policy of NPL management, how they really ensure that there's a transparency, is asset quality, so that they can really act in a prompt and a very swift manner to assist those financial institutions that can be exposed to some difficulty. I would also be pleased to hear from them how the crisis, the fact that we have moved to remote working, how has that really affected their day-to-day supervisions work? If you can elaborate a little bit on that, would be very useful.
Okay, thank you very much, Mr. Kamai. I'm clear. Can you hear me now?
It's very clear, loud and clear.
Okay, perfect. Okay, so tackling the non-performing loans, well, at the beginning of the pandemic, the Central Bank of Egypt adopted lots of measures, among which, as I mentioned, I wanted to mention in my first question, but it's good that I got the chance to mention it here, that we tackled the non-performing loans portfolio in the banking sector, and we issued 2 initiatives for individuals and for companies, whereby we issued a regulation to the banking sector that with certain criteria, if an individual or a company that proved seriousness in payment of the loan or part of the loan, for example, starting 50% of the amount, this should be written off. And if the client wants to deal again with the banking sector, he could be allowed without any detention from dealing with the banks. Of course, this helped a lot in the process of the non-performing loans in the country, and I want to mention that the NPLs ratio reached in June 2020 3.9%. Whereby it was in March 2020 4.1%. So strangely, it got better, and this is due to the fact that 2 things: that the initiatives that the central bank has issued in the amount of 200 billion. I also mentioned that in my first question. Initiatives to support the sectors. This led to the fact that the credit growth increased in the economy. We wanted to make sure that all banks don't stop lending due to the crisis. So this initiative, with a very reduced subsidized interest rate, led to increasing the portfolio of lending. Along with this initiative of the non-performing loans, led to lots of write-offs, which showed an increase, and which showed a development in the rate of the non-performing loans. Also, we monitor closely the NPL ratios in the banking sector, whereby lots of stress tests are conducted regularly on individual and on a system-wide basis. In order to prepare suitable measures that the CBE could take whenever there is a tendency of increasing the non-performing loans. Also, during the credit moratoria period, where we deferred all the payments of installments for individuals and corporates for 6 months from March to September, we did not consider it. We let bank not consider it a significant increase in customers' credit risk while calculating the ECL in the IFRS 9. After the credit moratoria, we offered a forbearance solution to the banking sector, whereby we stopped the postponement of installments. However, we mandated banks to study on a case-by-case basis each sector and each individual client, so that they got their money back, but with no pressure on the liquidity of the system and of the sectors. This was basically it in dealing with NPLs. Back to your other question regarding the remote working. Of course, at the beginning, it has been a challenge for all regulators, especially for the on-site regulators whose work is they have to be in the on-site of the bank. However, we froze the on-site supervision, but we replaced it with the proper, very close monitoring to the banking sector through the off-site supervision. We issued, of course, on the spot circular to the banks to activate their contingency plans and business continuity plans. In addition to studying affected sectors very closely, especially the tourism sector, for example, which stopped totally. And of course, on the level of the government and the Central Bank of Egypt, a decision has been taken to reduce the number of employees working from the premises of the work. However, all facilities have been given to these employees to easily and smoothly work from at home, work from home. So work has been done perfectly during the crisis without any to be affected. Yeah. Thank you.
Thank you very much. On this, I will invite the participant to submit their questions. I will also request from the panelists that and all the participants that if allowed also we can extend a bit our sessions for maybe the next 15 to 20 minutes so that we cover also the question that we receive from the panelists. While we are waiting for these questions, I will now move to Mrs. Mambo and Mr. Okafor on 2 points. It's about I want to touch on what we can call the cooperations and coordinations amongst supervisors, whether in or I mean, whether at the national, regional, or even internationally. I think there is, as Mr. Mohan mentioned in his presentation, there's a need really to activate that because this crisis, it's affecting all the country, it's affecting the banks, and we know how many banks that are operating across the border. It's not an issue only for the banking sector. We know within the country, we heard a lot about the capital markets and so on. So there's other channel of transmissions. So, I mean, as we say, ladies first, I'll go first to Mrs. Mambo and then to Mr. Okafor on that. You have the floor, Mrs. Mambo.
Thank you again. In terms of cooperation, even prior to COVID, we've always had a very cooperative way of doing things with most of our banks, home regulators. The majority of the banks right now are South African. So we have regular meetings with the Reserve Bank of South Africa and their Prudential Authority. On most of the banks that are South African, they are also our domestically important banks, significant banks. So we have, aside colleges, supervisory colleges, we also have what we call prudential meetings on a quarterly basis. So we are always touching base in terms of what is going on from a subsidiary point of view, the Zambian entity, and also looking at it from a group perspective, and whether the risks that we are seeing from here and the risks the home regulator is seeing, are they well managed, and are there sufficient risk mitigations that the group has put in place? And then there are certain submissions that are done by the local entity, like their recovery plans. And there are certain indications of support that are supposed to come from group that we need confirmation, not just from the parent, but also from the regulator, whether that is possible in a time like this, especially in a crisis. Say liquidity support, if they've said they're going to get from their parent, is the regulator aware that there's this commitment? And are there any restrictions for capital flows between the two countries? And if there are such restrictions, can the regulator in that country assist us to get that support in country? So we've built these relationships over time, and it's been easy to even pick up a phone or drop an email to say there's this issue coming up, can we touch base? So that has continued. And in addition to colleges, we, for the first time, we've had first supervisory colleges virtually with at least 3 other countries. With the UK entity, we had with the PRA, and also the West African banks. We had colleges with Nigeria, and also the West Union Commission. In addition to that, for the first time, we had the inaugural AML-CFT College. It was a virtual meeting, but it was very beneficial because we are all going through, we've had the country's self-assessments done, the mutual evaluations, and we're going through addressing some of the issues. So it was good to compare notes despite the challenges that COVID-19 has posed. So I think on that one, I also just want to add that internally, within country. We also collaborate with the other regulators. The central bank supervises the commercial banks and the non-bank financial institutions. But we've got other regulators that supervise the pensions and insurance and also the securities market. So we have quarterly meetings with those other regulators. And because the pandemic, like Mr. Mohan pointed out, has cut across so many sectors and it's impacted and affected everyone, we've gone a step further to also engage with maybe other regulators that would not necessarily engage, like the Zambia Institute for Chartered Accountants, so that we collaborate on some of the challenges that the external auditors are facing as they go to audit the institutions that we supervise. And we've had regular meetings also with the Bankers Association, even beyond the monthly meetings that we usually have with them. At least at the onset of the pandemic, we had almost daily meetings and then weekly until we agreed on certain things and the expectations from the central bank. With that, I think I'll end there. Thank you.
Thank you, Madam Mrs. Mambo. I will, for the questions, I will invite the participant to use the chat panel to submit their questions. I will now hand over to Mr. Okafor on the same. Maybe in addition to that, if you can take one question that is we can relate to. We mentioned, I mean, the remote working. Which are the measures that you have taken in your jurisdiction actually to ease the remote working?
Yes. Okay. Thank you very much. In terms of supervisory cooperation, at domestic level, we have our Financial Sector Regulatory Coordinating Committee, which is a committee of all the supervisors in Nigeria. The secretariat is within the central bank, and the governor of the Central Bank of Nigeria is the chair of that committee. So throughout the crisis, the committee has been getting reports. Industry stress tests have been carried out, reviewed by the committee. So that's on domestic level. And at regional and international level, we belong to College of Supervisors of West Africa Monetary Zone. So we held meetings to review the impact of the pandemic and the position we need to take as a zone. And after that meeting, we produced a report, and we are monitoring that report, the implementation of the report by each country in the zone. We also held our supervisory colleges for two of our banks that Madam from Zambia alluded to. The supervisory college was very well attended, and for the first time, Bank of England was represented because it was a virtual meeting. So, and everybody heard his opinion, and we learned so much from that lesson. We also attended colleges by ETI and Rand Merchant Bank, which are for which Nigeria is a host country. So we attended those colleges. Then Bank of Ghana and Bank of England also prepared a workshop to review our response to crisis management and the resolution in the participating countries. We also made presentations at that. So we have been collaborating with other regulators on the supervision, on the approach to supervision. You know, we have adopted largely a virtual, our examination has been virtual, except that critical things that we cannot review virtually, examiners will go to the field to look at it. For instance, it may not be easy for a bank to send the board minutes by mail. So we get all the reports we can get online, we review them, we'll carry out a remote audit on all of those. And then for the few items that cannot send by mail, dedicated examiners are sent to the bank premises to look at them and take copies and continue. And like I mentioned earlier, we are concluding on the report for our high risk and above average banks presently, and it is coming up very well.
Okay, thank you very much. Thank you very much for this detailed response on the point. What we say, we received one or two questions from the panelists. The first question is to Mrs. Mambo. I read it. In Zambia, there has been big reduction in policy rate during the pandemic. How did this affect the credit appetite and the level of credit to the private sector? Just give you maybe 1 minute to answer that question.
Thank you. And indeed, the reduction in the monetary policy was aimed at encouraging or supporting lending to the private sector. And also, if you've noticed the facility that the central bank introduced to support liquidity for onward lending, it was also anchored to the policy rate. So what has happened is, I think from the time the facility was launched, there's been almost a reduction from about 12-point-something% to 8%. And we are expecting credit to start flowing. If you look at the growth of credit in our market, for a long time it was subdued, and until about August, that's when we've seen a bit of recovery coming through. So we've now started seeing growth, and we are hoping with the latest reduction in the interest rate, we should see further growth. And hopefully we'll see it translate into private sector credit lending by the market.
Thank you, Madam. Another question that we have here is that it's about all the information that are related to the measure that have been taken in the respective country, and where can someone find them at the, yes, is it available at your website or not?
Can I answer this, Mr. Kamawi?
Yes.
Yes, because we on the central bank, we have it published on our website. Maybe just you will find it in Arabic for now, but we're in the process of translating it, and it will be published in English very soon. We have 18 measures that have been taken.
Yeah. Zambia.
Zambia, we also have all the measures on our website. Okay. If you, there's a link, I think, on COVID. So all the measures relating to COVID are published on the website.
Nigeria?
Yes, Mr. Kamawe, thank you. All the regulations we have issued are also on the website of Central Bank of Nigeria.
Thank you very much. Actually, on Making Finance Work for Africa, we have created what we call a COVID tracker that is also available. It's on our website. And maybe after this conference, what we will, this session, what we will do, we send you a request if you can share this document with us, so we can also post the document on our website, so the participants with this conference can actually download this information from Making Finance website, and then we will also put maybe the names of some of the relevant people in this institution, at least the participant, the panelists for this session. So if they want more information on get more information on what's at the measure, what's happening in the country level, they can really reach out to you directly. On that, what I will now do, I will move to Mrs. Badawi again, go back to Mrs. Badawi and ask these questions. In terms of the challenges that have been related to the digital finance, we heard a lot that we have, there's a kind of this global trend to use a cashless, I mean, to a cashless, yes, economy and less cash transactions. What can be seen as the impact in your country? Also, what can you say in terms of the functioning of the critical market infrastructure in Egypt? I mean here the payment system, the security, and the clearing system, and so on. What have you seen at that level that you can share?
Thank you, Mr. Kamawi. Well, actually, I believe that the COVID-19, one of the positive things of the COVID-19 is that the country started to move towards the digital payment services more than before. In Egypt, we are moving towards the cashless society, and we have been taking very serious steps in this regard since 2016. In 2017, a National Payment Council has been established headed by the president of the country, which shows how important the issue is for us. And we also established our national payment scheme, which is called MISA. All this is coordinated by the Central Bank of Egypt, and we have been working on this digital transformation, and we started paving the way for it with a solid digital infrastructure. Maybe during the pandemic itself, we used it. It was a good chance for us to we put limits on the cash withdrawn from the banks, so that we could encourage people more to use the digital financial services and the electronic means of performing financial or banking transactions. We also waived the commissions and fees taken from customers while using the digital financial services for a certain period of time. It was till September, and was then extended till the end of the year, because we saw that people that this boosted the usage of digital financial services. We also issued initiatives for electronic payments. Actually, two initiatives. One of them is through giving incentive to banks and merchants to use points of sales and QR codes, distributing 100,000 POSs financed by the Central Bank of Egypt through the banks, and also 200,000 QR codes. Also, we pushed banks to distribute 6,500 ATMs in rural areas mainly, and areas outside the capital of the country. Maybe this does not serve for the cashless society, but it serves financial inclusion, because people started to enter the banks to take plastic cards and use them in withdrawing. These initiatives could not have been achieved without the powerful infrastructure that the Central Bank of Egypt has been putting in this field, along with a regulatory framework that CBE has always been working on, with issuing, starting 2016, with issuing the mobile wallet, the mobile payments and mobile wallets regulations, the prepaid cards, and so on and so forth. Also, I forgot to mention something, that we issued the government issued the less cash law with certain articles that with caps on dealing with the government with certain amounts exceeding this till certain amounts. They have to use this payment scheme that I mentioned, the MISA card, and this also serves for the less cash society. Thank you very much.
Okay. Thank you very much, yes, Mr. Badari, for this overview of the measure taken at the level of Central Bank of Egypt as a country in terms of yes, promoting digital finance and cashless economy. We are pleased to see that the Central Bank is really at the forefront driving these transformational changes. Maybe we now move to the closing of our session. So what we will say, I will make it go to last round. I will talk about the supervisory priority for the future. What do you see? Will not be very long. You have heard from each of us some demo presentations, what we have taken as a measure, what is happening at the global level, and so on. What do you see as we are still in the crisis? It's still unfolding now, the crisis. Although we are managing the NPL, we're managing the risk, but we don't know. We are optimistic that the vaccine is coming up, but we don't know how that will really, others will happen. And so there's still uncertainty in the air. So what do you see as a supervisory priority for the future? I will start with Mr. Mohan. If you can give me a bit your take on that, just maybe 1 minute, and then we'll do that now. Please unmute. Yes, sir. Unmute.
Yeah. Thank you. So the way I look at it, there are 2 or 3 aspects that I would like to highlight. One is, the use of technology. So you have fintech, you have regtech, and you have souptech, right? The use of all these will be enhanced, and as has been mentioned also in this meeting, COVID-19 has been a great accelerator as far as the use of technology goes. Together with that, we need to be mindful of the cyber threats and the tremendous damage that cyber threats can cause. So that is the other side of the use of technology. Another aspect that I like to highlight is more and more work towards sustainable finance or the climate risks, because the climate related risks can have a lot of severe impact, something like this pandemic has had on societies, on economies, on the financial systems, and so on. So that again is going forward, one of the, I would say, should be one of the priorities. And of course, implementing all these reforms. There has been some kind of let's say relaxation in the regulatory and the supervisory norms, but we need to get back to the normal as well. I think that's all I have to say.
Thank you. Thank you. Mrs. Mambo, what's your take on this question?
Thank you. I'll start by saying we have a strategic plan for 2020 to 2023. And the theme of that plan is building a resilience, an inclusive and resilient financial sector. It's anchored on 2 pillars: financial system stability and also financial inclusion. And broadly speaking, in terms of what we are covering there, we are looking at enhancing our stress testing framework, both for macro and micro stress testing. We are looking at cybersecurity. We are looking at souptech that Mr. Mohan has referred to. We're also looking to leverage on technology to enhance financial inclusion and to close the gender gap. So there's gender mainstreaming as well as financial inclusion. These are our normal, as we balance with the crisis in terms of responding to the crisis. But another thing that the crisis has brought about is we're going to review how we conduct our on-site surveillance in terms of how do we safely do that if we are faced with a crisis like the one that we are going through. We've just conducted some 2 pilot examinations, which had mostly done virtually and from an off-site perspective, though it's on-site work. So we are trying to see how we can refine that process so that we still manage to do our work without leaving the institutions alone for too long. We're also moving to a point where we are now validating the ICAP process, that's the internal capital adequacy assessment process for the banks, to ensure that those processes are embedded within their risk management frameworks. So with the pandemic, we actually requested the banks to do a stress test that includes COVID pandemic, and we've received the ICAPs which we are now going to review to see how they've addressed that and what is the risk that maybe we have not seen from where we are sitting and the banks are seeing those risks. So going forward, really, most of the things will be guided by what is in our strategic plan, because it's still relevant even during this crisis, because it actually speaks to some of the things that have come to the fore, except that they've come at a quicker pace than we had planned. Thank you.
Thank you, Mrs. Mambo. I will now move to Mr. Okafor.
Yeah, thank you very much. Like Mr. Mohan said, the increases of digital banks, fintechs, in relation to that, Nigeria issued a regulation on fintechs this year. We know that going forward, we're going to see a lot more of those fintechs, telco-led fintechs operating. In addition to other things everybody has said, we expect to see a few mergers and acquisitions, market-induced mergers and acquisitions, and yeah, whereby institutions combine their operations to withstand the pandemic, the impact of the pandemic. Thank you very much.
Okay.
You are on mute.
We cannot
Hello?
hear you.
Yes, I can hear you very well. Sorry. Yes, I will now hand the microphone to Mr. Badawi on the supervisory priority.
Maybe in the Central Bank of Egypt, the priority would be, of course, the continuous and the close monitoring of the NPL's ratio. Beside, of course, the continued stress testing performance on the banking sector for the coming period of time on a regular and on a very close periods of time. Of course, also we intend to work on the impact assessment of all issued measures that the Central Bank of Egypt has already issued to detect which of them achieved the results that it was targeting. Also, on a big priority of the Central Bank of Egypt, it has been and is still now, and it's growing, is the use of technology, whether in the supervision of the banks, or whether also as a tool to achieve financial inclusion and to reduce the informal sector, and accordingly move as much people as possible from the informal to the formal sector. You know, the nature of the countries in Africa has a lot of people who live in villages and are scattered across the country and do not have proper access to financial services. And as we all know, allowing these people to enter the formal financial sector has a really positive impact on the economy of the country. So this is also a priority and for the Central Bank of Egypt. Thank you.
Thank you very much, Mrs. Badawi. I think with that word, I think we'll conclude these panel discussions. I mean, this topic is quite broad. We cannot in 1 hour and 30 minutes do justice to the subject entirely, but I think we have really gone in depth in covering some of the points. What are the measures that have been taken really to safeguard our financial system? Well, my takeaway is that our central bank have been very proactive in monitoring the risk that our banks are exposed to. That our banking sector, for now, you can say, are quite, they are resilient, but they are also, you can say, maybe not use the word sound, but actually they are not made, there's no major threat that we can anticipate. We hope very much that the crisis will get under control, and that maybe we will now move into the post-recovery phase. And with all these risks that have been well managed, and with all action that has been really taken by our authority really to mitigate the crisis, our banks are in good foot to really support the post-recovery phase. I also take note that or take away that there have been an acceleration in the use of technology in not only operating in the central banks, but also in terms of how the banks really conduct their business. So technologies has become very important due to the crisis, and that means that there is also emerging risk that are there for coming up, like the cyber security risk. Hopefully, also our banks and central banks are also fully aware of that. They are taking steps really to enhance the supervision, cyber security frameworks, manage cyber risk. This particular point is one thing that's also covered within the framework of the Community of African Banking Supervisor. There's a working group that has been on that issue of cross-border banking activity and was expanded mandate really to cover cyber security issue. I think some of these questions that we have discussed today will also be, there will be a follow-up in the framework of the Community of African Banking Supervisor. Madam Badawi head the sub-working group on Basel regulation, which really cover all regulatory issue. Mr. Okafor is also managing, he's the lead on the working group or sub-working group on crisis management and fintech. So I think there is ample work ahead coming, and that we will continue this in the framework of the CAPS. On that, I will thank the participants. So we started this, we're sitting between them and then lunch. And at any time we had more than 80 participants that were following us, which is a very good performance, and also show the interest that they have on the subject. We thank you for this very insightful presentation, for your time, connecting from Zambia, from Nigeria, from Mumbai. It's very late already in Mumbai, Mr. Mohan, and Mrs. Badawi from Cairo. So we continue with the next session that will be on trade finance and overcoming the challenge of SME. Have a good day to all of you, and then we continue our collaborations. Thank you very much.
Thank you. Thank you, Mr. Kamal.
Thank you. Bye-bye.
Bye-bye.
Thank you, Mr. Kamal.
Thank you, and bye-bye.
Bye-bye.
Thank you. This is Guy Menon. I'm the Knowledge and Research Manager with Making Finance Work for Africa. I'm going to play the role of Master of Ceremony. In about